Yep, we can hear you.
Woohoo! Gonna do my weekly rundown with Jim Cramer's list, and I've been pretty good at picking out at least two good swing trade setups a week out of that. So it's been a lot of fun. Let me see here. I need to make sure
Inverse
this is.
Kramer.
Yeah, I've been kind of messaging back and forth with Mr. Tuttle on that, and I'm hoping to talk him into running a third ETF that just sells premium on all of Kramer's picks. That would be fun. All right, let me get down to it. Kick this off, get this going. There we go. All right, I usually start with the weekly chart and work my way down for finding the dope that we're gonna put on the chart, and we figure out where the swing trade targets are by doing so. As you can see, I've been quite busy with Tesla, and man, been nailing targets right and left. Knowing about this liquidity zone going into earnings on Tesla was epic because price went to that sucker with a penny and then back down. So, knowing what I know about what I've seen in the past on the chart, I can figure out exactly where price targets can be. And it's just remembering that there's going to be a bunch of bag holders who chase this wick right here, who'd love to get out for as little loss as possible, or maybe even they average down in some of these dips, and that's where their price target is for profit, or break even on the first leg, and then make profit on the second leg with a what do they call that, cost average reduction. I never average down, ever, ever, ever. Don't do that. Don't recommend it. All right, moving on. They started with let's see here, AXP. They're a bit bullish on American Express. I'm kind of iffy on credit cards right now because I know that a lot of people are still struggling to pay back their balances that they built up living off their credit cards during the pandemic, where towards the end of it, where all the stimulation dried up and people were still having to pay bills because they still weren't allowed to go back to work. A lot of people raised a lot of freaking debt. So I'm a little bit overall bearish on credit cards, and we can see, it's been kind of a wishy-washy machine here. But we have a new weekly liquidity zone here on American Express, so I'm actually a little bit bearish on that one. Um, of course, as soon as they announced it, that they were a little bit bullish on it, they got this number, and you know how that all works. So effectively, we're looking for just a dead cat bounce. We might be able to day trade it to like 172, 173 today, maybe. From there, I might be inclined to possibly put together a bearish swing trade on this thing. So, just my opinion. Um, the other scenario is you have the basis of a really nice measured move here, and I love drawing these things. Just a simple box. Kind of take the median to the median, draw two, and drag it down. You get a bearish price target. So I would say 164.40 is a key pivot area. Kind of watch for a bounce off of there. If it breaks over bearish here, it breaks this key support area around 170.50, we could get a good bearish swing trade out of that. I'm not saying to go ahead and take that. This is certainly not financial advice, but just kind of keep an eye on it for an opportunity, because you can take that momentum, and that's what we do. We trade the momentum. We don't have to worry about all of the little parts of it. We just have to worry about where's the meat and potatoes. I'll skip the veggies on this plate, thank you. So, although they're a little bit bullish on American Express, I am not. Let's move to the next one here. NBO. I don't even know what this is, but it's one of the club holdings for the folks over there at MSNBC, and yeah, I just don't know that I like it. It's got a nice wedge. Let's draw the wedge. We could certainly see this break into a bullish measured move. That is possible. Let's go to the weekly. Aha, that's a little bigger wedge. We've already made a 1-for-1 bullish measured move. Probably going to revisit the high here. So look for a short-term price target around 172.50. Can certainly stick a pivot on there.
If you put a box of that consolidation over around 118, topping 118 over there, that's a 3 to 1.
Yeah, that's true.
Yeah.
3-1. So we might see it come up and revisit the high or half the high, which is where it's at now, revision. And we could see this thing break down for some more accumulation. Because typically when you get a 3-for-1, you almost always get a mean revision afterwards. So we could see it, pull back to like 140-ish somewhere. Or the other scenario is it could continue on up. Overall, that's one heck of a long bull trend. So
You
I'd love to see it pull back, but for now, I'm kind of just keeping an eye on this one. I always make a list of all the stuff they talk about over there, and then I can kind of pick through it. And sometimes I can just find, a quick random watch list build just out of that. So we'll keep an eye out for this to finish its move. Whoops. And let's see, short-term price target. Yeah, 170-ish. Cool. Maybe an extension of the 172 pivot. Certainly in a wedge, it's going to do something. We're right in the middle of the box, so either we get a full move or we get a breakdown for mean revision. Pretty simple there. Another one they mentioned was Lily, LLY. That thing's just been beast. Consumers love to spend, and man, inflation be damned. Credit card balance be damned. Some people just keep on spending. And that is certainly what we're seeing here. So we've got a 1-for-1 measured move set up. We've already made more or less the move off of this, return to low. So we could see this thing continue on. First price target I'd have is about 494, and an extension could be up here at 550. Let's dig into a little bit shorter time.
From now on, I'm gonna start accumulating $3 million worth of credit card,
Right?
credit card, credit. And then I'm just gonna spend it, disown all my kids, divorce the wife before I die, and then nobody is responsible for my bills.
There you go. Smart.
Oh
Yeah,
boy.
there's
I
actually
joke, man, but
there's
it
actually
actually can be done,
there's actually a lot of people think the same way, dude.
Yeah.
You wouldn't be surprised. I am not surprised. Yeah, there's a lot of people who have the same thinking.
Well, when I was, illegal in this country, I did think about maxing out all of my credit cards and just getting the hell out of here.
Yeah, I mean, it's
But then I
possible.
got my papers and I was like, shit, I'm gonna have to pay it back.
That's for sure.
Uh,
All right. Look at this beautiful cup and handle. Nailed the second rim line on ISRG. I've been ignoring this penny stock for far too long. It's not a penny stock. It moves like one. Let's see here. We got 2 rim lines already met. There's your nice cup. There was the handle. There's the breakout. Run 1, 2 rim lines. Now we're pulling back. Could actually see this thing accumulate for a while, but let me look further left. Pretty much follows market trend on the ES. I mean, you can almost lay a SPY chart over the top of this thing and see the same damn thing. With the exception of we haven't been here yet with SPY, but we're getting there. So long story short, let's dig into a 2-hour chart. Aha, now we've got range. We can trade that. Let's see here. We pulled back this move, pulled back that move. We've got mean revision done. watch for accumulation. We could get a quick little measured move out of this guy. And we could run the way the market's been going. The bulls still have the general long-term trend. So we could watch for this to return to a high up here at about 352. I might mark that one. That's going to be one I'm definitely going to watch. I remember trading ISRG as a penny stock at some point, I swear. That sounds like a familiar ticker. Did they have a reverse split somewhere way back? Maybe it was ISIG. That's what I'm thinking of, ISIG. Totally different stock. Never mind.
And that big gap, they got a nice big gap over there. In the
Heck yeah.
previous chart you're on,
Yeah, this one here.
you know.
And then on the 2 hour, we had a little gap here too. Big old bar. Love those overreactions. Love those 50% retracements.
Oh, jeez, this needs to stop pushing up.
If we can break resistance at 338.50, we could see this thing run the rest of that revision. It could certainly come down and test the low again too. We can get a double bottom out of this. So let's mark the key support area as well. It's just going to be on that bar. So the trade can happen either way. We can either get a pullback to the first low, get a one first low, first high, second low, and then revision, or we could get through resistance here and resume a 1-for-1. Definitely keep an eye on this one. This has definitely got some volatility in it. We could certainly trade it. I'll keep that on the watch. And then there's Pan West. They mentioned again. They keep playing with this one, and it keeps doing pretty much everything we lay it out to do. I had this move set up. We came through resistance here. We've accumulated. We're ready to run this trend, and I've set the limit line here. All it's got to do is break this, and we can resume a 2-for-1. Pretty nice. Institutional target is up here at $300, and I kind of contest that a little bit, so about 295. But I also want to say that usually when you take half the move, 271, half the box, it's usually good enough for a trader because this is all going to be hype and fluff pushing it higher. This here is going to be where the trade is, so I'm going to keep an eye on this guy. It's accumulated. It's a nice wedge at the top here. I'm always talking about these rounding tops where they look bearish until they hit support and bounce, and we're just about there. Give us a couple more days. I think next week we could see some action on this one. So I'll definitely put that in the notes too. I like Pan West. Good trading. All right, moving on. We're going to go to Halliburton. The oil of oil. I had marked out a while back, I can't remember the ticker, but I was talking about producers were starting to have rotation. And certainly after producers had rotation, so do the refiners. Well, this company kind of does both, but we're looking at the classic H pattern. People see these come all the time. We broke R1, marked that out really clean. We've made a clean 1-for-1 move on this thing. And these guys are still bullish on it. So I'm kind of like a little skeptical at this point. This is where you would kind of watch for an inverse Cramer reaction. Let me draw the 1-for-1 and you'll see what I mean. We come right up to this high. Let me go back to the mean, probably about there. Mark that above. We've met that target. Now we're looking for retracement, and I'm going to move this pivot down just a little bit right here to about the middle of the box. 3580 would be my ideal location to see if it accumulates and then resumes the trend. If it can't do that, then we can certainly take a bear trade right back down to the mean revision of support right down here, 3360. So it doesn't move a whole lot of dollars, but I know the options chain on this thing is pretty nice. We can probably make some decent trades out of that. And that would take us right back to the mean of the previous double bottom that we reversed from. So just takes a little bit of movement to make a lot of percentage on leveraged positions, and this is a great I like to use debit spreads on this guy right here, so kind of one of those ones we'll watch. As far as oil goes, though, I mean, it's kind of, you know, you got to wait for the rotation. You got to catch the right rotation move, and that's kind of hard to do when it's only moving like $2 or $3 on something like this. This is a huge market cap. Don't get me wrong; it takes a lot of money to make this move, just $2 or $3. So let's look at the whole long-term picture here. We've got this nasty, huge wedge, right? Looks big on the chart, but realistically, it's not a whole lot of money really for a swing trader. So leverage positions it is. Um, Looking back even further left, these are areas we've played in before. We've come down, made a 2-for-1 to the bottom here, down to like $4. If you bought that at $4 in the pandemic and ran some swings on this, you killed it. But we got a full 2-for-1 to the top here, and we're accumulating again. So either we're about to come back down and revisit this low down here around $20 at some point in the next year or so, or we're going to continue on, and this is going to be our accumulation for a giant 1-for-1 where oil goes astronomically high, and this hits about $55 a share. So kind of take it for what it is. Trade the setup here. You can. It's a weekly chart, so you got plenty of time to take some swing trades on this setup. But know what the big picture is telling you. Big picture is telling you we've got a pretty good chance of running much higher. This is a wedge, and this is the third attempt to break out of that wedge. So oftentimes when they hit that 3 number, they'll accumulate a couple bars and then start to take off. So we could see a nice bull flag out of this thing coming out of this accumulation here on the daily chart. Give it a couple weeks. We know that typically things will cycle with oil when it comes to elections in particular, and we're getting kind of closer and closer, so we could definitely see some volatility on oil coming into that. That's about all I got to say about that. I don't want to get political. Okay, moving on, we got J&J, another hot button trade. You can see I've marked some liquidity zones before. I've traded this range before, traded this range again. Now we went parabolic. They got through a whole bunch of crap and everybody just started chasing it. Well, let's look left. In fact, let me get the weekly chart out. They know how to make money. There's some volatility there. They're always controversial. They're always in the news for this or that or some lawsuit or whatever. Big pharmaceutical company, what do you want? So, again, we've got a big giant move, accumulation, coming out of a wedge. I've traded this thing every which way. I've loved trading J&J. But now we've got two things to pay attention to. Look at the size of this bar. I know someone who calls these mother bars, and it's exactly what this bar is. So we've made a match of that bar. There's a very high chance of a pullback, 50% of that bar. I would maybe even say that the 166 pivot would be ideal. So certainly keep an eye on short-term volatility with this thing. And if it hits any one of these pivots up here and reverses, you could certainly take a quick bear scalp on that thing. Give it a swing trade. Again, it's kind of a better for leveraged positions type of thing. So if you know how to trade some debit spreads with these, this will be coming up with a good trade plan sooner or later. Not going on the immediate watch list, but I think we should definitely keep an eye on it. All right, CSX. Cool. We could see a nice mean revision. Big old cup and handle. We've made our handle pull back. And a lot of stuff moves on trains. I don't know if you know that. I'm pretty sure everybody knows that. All right, so we've basically made this move. We've made the 1-for-1. That's been done. I might shorten that a little bit. We've made just a slight overshoot of the mean revision here. But we've come down into this bar here. There's a control zone here. So let's shrink it to that zone. Mark it. Oops. I'll try not to dumb thumb the damn chart. There we go. All right, that puts us exactly with our range of our dead cat bounce. So if this then that would definitely play into shape here. Short term, we could see a full 50% revision. We could see this thing come out of this nice reversal pattern here, and heck, we could even say it could day trade and close around 32 bucks. It's very possible, but it's got to break this range first. So let's set a target. Let's call it about 32.50. No, 32.80. That was right the first time. Let's see if this will cycle out of this liquidity zone and find a way to break the shorter term liquidity zone, which is this wick here. And if we can get out of this range, we could see a good swing trade next week to revisit this pivot, 32.80. Not a massive move. It's at 32.47 now. Again, leverage. The other scenario is if it rejects up here, what do we see? We could see a big bearish measured move. And here's the block for that. So come to the mean, drop it down right there. And you can see this little wick here. That's another liquidity zone. So if we break down below that into next week, we could see this reach a nice one-for-one bearish move down here to about 30.50. Definitely watch this coming Monday. We're going to see something happen here. We've already seen this mess. Now we just need to see which way it's going to go from here. Either A, it's going to break out and resume back to the previous high, or the more likely scenario is B, it rejects up here, comes down through this A to B, and then starts a measured move. I'm going to put that on the watch list for sure. And I'm going to put a little down arrow on it because I know it's going to be bearish. All right. Got a couple upgrades coming up, and they're the big boys. So we got Meta. And then we've got Microsoft afterwards. But Meta's just been an absolute beast. Made a beautiful 2-for-1. Nailed the previous institutional target at 320 there. I mean, to the number. You could not have played that better. That is most of a revision of this bear trend. All right, I've traded the 1-for-1 here. I traded to the mean revision here of this trend. Kind of all over the place on that one, and now it's just kind of hanging out. Well, we've got a reversal here, and there's a nice bar for bar on a weekly. We could see this make a mean revision of the previous trend. So let's set another pivot here around 278. But here's the thing. If we accumulate here, we can get an ultra rare 3-for-1 on this trend. I don't see it, but maybe. But these guys went and raised the price target on that to 336. So I'll just leave this one here because that's a previous known target. And 336 takes us to an interesting setup here. And I'll start drawing that in a second. I'm going to do this a different shade of purple so we can recognize it against the other one. There we go. Maybe make this one lighter. So new institutional target at 336. We're accumulating in the top echelon of this 2-for-1. That doesn't make a full 3-for-1. In fact, if we draw that, it makes about a half. So get ready, because if the institutions start to see that getting close to that first target again, they're going to start selling into that strength. It's almost a promise. So you always want to kind of mark about half of that upper line there. I'm just going to use, I'll just use a segment line. I don't want this to be like standing out and sticking down the chart. So I'd look for about 348 for an extension if it overshoots that. That's about as high as I could see it going until it has a healthy pullback. In the shorter term scenario, I'd love to see a mean revision down here to 277. And we're well underway with that. So I draw a lot of boxes. So let's see 288 and then maybe 278. And 278 would be most of a 2-for-1 measured move here. That'd be ideal to see it pull back that far, but in here we're at a previous compression area, so we're kind of looking for possible accumulation at the halfway mark of this box anyway, but definitely be nimble if you're going to try and trade this thing. It's going to be a rough ride. And again, there's a lot of controversy. They're in and out of lawsuits, this and that, you know. I don't care. There's no such thing as bad publicity. It just brings attention to it. When there's attention on it, there's price action. And that's what we're here for. So if it breaks this line, let's go ahead and make that a very solid standout line. Watch this thing next week. If it breaks below that, finish the move. If it bounces here, go back to revision. That simple. So there is a trade set up here. We just want to see which way it's going to break. So probably by Monday, I'll put a note out on Meta and see if we can pick up a quick scalp for a day trade or even a overnight swing trade. All right, Microsoft, last but not least. She's been a screamer. We've got a new institutional target of 415. Good Lord, are they serious? Wow, okay. Let's mark it and do some dope. That is quite lofty. Where are we really? Well, we've done the cup and handle, but we haven't got the handle. Love to see this pull back. Like to see it around 331, 332. There's a long wick up here, so there's definitely some liquidity here. There were some sellers here. Let's see what that looks like on the daily chart, because that's where we're going to mark those zones. So if it can get above this area here, okay, I can agree with, a 415 target. I mean, we've had one hell of a 3-for-1 already, right to the penny. So definitely keep an eye on this area here, and we'll run it with range. So if we range this area, cool, we can swing trade it, day trade it, no problem. If we break this area here, we can certainly start heading for that target. But if we break over here, we've got all of these key support areas to revisit. And there's also liquidity down here, and there's also a gap here. So if we break this key pivot here at 342, we will most certainly see the bottom of this. And I always mark out these liquidity zones when I see this in 3 areas, because A to B here gives a high probability of finishing a move down to here. Bounce off of here gives a high probability of ranging here. And then a trade A to B through here usually sets up for a 1-to-1 thereafter. So we could see it go either way. I think next week will be quite exciting for this. And look, if you drew boxes, you get exactly that move. So Microsoft would be my better focus than Meta as far as swing trading setups. And today we've achieved L1, R1, L2. This is potentially either a double bottom or a bear flag. Take it as you see it, because it will give you a setup. We always say, don't trade the setup, trade the break. Now, if you were crafty enough, you could use some accumulation price action to build yourself a condor, probably about 45 days to expiration. Run a set of call debit spreads and a set of put debit spreads. And it'd be easy. Run the 360, 365 call debit spread. Run the 330, 335 put debit spread. You could actually make a break on that, and all you got to do is wait for it to take direction. Sacrifice the loser, ride the winner. You could also run that into a swap strategy, if you will, depending on what kind of size you got in it. Definitely going to give you some opportunities, and ideally this thing is going to be a leverage position, and Microsoft usually plays nice with price action, so I like the setups on Microsoft. All right, well, that's the last one on my list. I'm definitely going to put Microsoft on my list. I will definitely put this dope into our watch list as is, and that'll be my key focus, as well as ISRG there, and possibly CSX. Thanks again for joining me. We'll see you guys next week. Have a great one.